Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Much appreciated. My apologies for the delay in making this new video. You know, sometimes life takes you down a very busy road, which takes longer to negotiate yourself out from. But the main thing is I'm back. I'm on the right track. So thank you for your patience. I want to thank all of you who have taken the time to make comments in the last videos and what have you, and also click the like button. I can't tell you how happy that makes me feel, and it really makes me feel inspired and appreciated in order to make more videos. So thank you from the bottom of my heart. On to today's video. Some of the questions I want to answer are four types of questions really. The first one is always, where are we in the 4-year cycle? The second question is, when is the best time to buy? Should we buy now at these levels, or should we wait for the market to start going up again? Or are we expecting a bigger correction? So I'll give you my views and opinions on that. Thirdly, how will we know when the Bitcoin bull run is coming to an end? As you know, I've been talking about my exit indicator, so I'll go through a little bit of that as well. And finally, what happens if, let's say, something very bad occurs and Bitcoin comes to a sudden abrupt end, like nearly it did with the COVID-19 situation. It had a big fall. But what happens if there's a permanent fall? What do we do? And what should we do in terms of our investment strategy? So I'll be answering some of those questions throughout this video. So before I begin, I want to remind everyone that all my videos are for educational purposes only. I'm not anybody's financial advisor. I hope and I expect everyone to do their wider research before you make any decisions. At the end of the day, it's your money, it's your responsibility, so please take care of it. Also, if you find value in this video, please do remember to like and subscribe and to turn on the notification bell. So with that out of the way, let's get cracking. So let's start at the beginning with Bitcoin and the short-term analysis. We're on the 4-hour chart. It's just a little bit of a zoomed out version of exactly what's been happening. So we've obviously made a big move up here, up to this point when we topped out at around about the 42,000 level. Now, since then, we've been making lower highs along the way, and this is normally a classic bear pattern. Now, because we're in a big bull market and we're expecting the market to go all the way between now and 6 to 12 months time, we know that it's going to break to the upside. But will it break now here, or will it break there, or will it go down first and then go back up again? So what we need to look at is some of the indicators as to what they're telling us. So currently, this is what the situation is. We've just come down and made a higher low here. So this was the low. We didn't go past this level here. Had we gone past this level here, I would have regarded that we're on our way down to much lower levels, maybe to 24, 25, 26 level. But the fact that we got pushed, can you see the wick here? The wick tells us that there was so much buying pressure that people were not allowing the price to go much lower than this. So what we've done is we've created a higher low. That will give the bulls a greater amount of motivation and inspiration to push the price higher. So my view on this would be that when we get out of this symmetrical pattern, more than likely now a higher probability. Remember, we don't deal with certainties. This is investments. This is the stock market. This is the crypto market. This is the money markets. We deal with only probabilities, nothing to do with certainties. And the greater probability is that it looks to me as though it's making a double bottom pattern here before we go and break out to the upside there. Of course, it can break to the downside, but as people who do trading, and I've done trading in the past, I'm not a very keen fan of trading, as you know, if you've been watching my videos. But if you were to, then I would wait until it breaks the necklines of either both the upside or the downside. And if it breaks the upside here, then basically, if you have at least an hour candle close above the neckline, then you know which direction the market is going. So always get a confirmation before you get into a trade that when you have an open and a close above or below the necklines, that's when to get into the trade. And then the way to measure it would obviously be to take the high from there to then the low to this point here, and then to actually where the break is, that would be your target. If you want to just do that for the downside as well, you can take that, and that would give you the target below. So that's what I would normally be doing if I was trading, but I'm not trading. As everyone knows, I'm in this market as a holder. So this is where we're at with Bitcoin. It's coiling in. So the end of this symmetrical triangle was going to be around about here, the 6th of February, so first week of February, if we go to the end of it. But I suspect we're going to break much before that, probably around about before the end of the month here. So let's wait and see what happens to Bitcoin, but certainly it's making a move towards a break. My view is that we're going to break to the upside, and we're going to break this all-time high of the 42,000 level and move towards higher levels around the 60,000 mark before we have another correction up there. And we'll just have to see how the market develops up to that point to see where that correction might come. In the last video, I mentioned the pivots. The CPR pivots give you a good indication as to where the targets might be. And in the last few videos, I was mentioning that for January, my target was going to be the 32,000. So that happened on the 2nd of January. And I also gave you the other target of the 37,000, 38,000 mark there. I was expecting to hit the R3 line, which is exactly at around about the 44,000 mark. And in my last video, I did say that more than likely, with a very high degree of probability, we're going to get there. And we may still get there and hit that before we move on to higher targets, some have you, before January. So that is still a very high probability. Once we started the correction down here, it looked like they may come back and actually find support around about the 25,000 level. But it was the 28,000 level I mentioned in the last video, because that's where the 4-hour EMA ribbons was and the 200 period moving average. These are the 4-hour EMA ribbons. Since the current bull market started on the 8th of October, we haven't actually fallen below this 200 period. This is the blue line here, the 200 period EMA moving average. Now, obviously we've fallen below the ribbons and we've got ourselves back again. The actual strength of the bulls have been that they've pushed it above the ribbons each time we've fallen through them. So when you look over here, and that when it was pushed back from there, you could tell that this is an incredibly strong support. So since then, we have actually breached this line, and this was what prompted me to think that we may be going lower. But we have made a higher low from this point here. And this was a great opportunity for us to move lower than this point here. However, there was just too much strength. And as you can see from this big wick there, that the bulls really took control and pushed the market higher above the 200 period moving average. The fact that this is the first time since 8th of October when this rally began, the first time that we've actually been below and closed below this 200 period moving average, and the fact that we've very quickly been pushed back up tells you that there's a lot of underlying strength, and the chances of us falling below this now have diminished quite substantially. So my view would be that now that we've made ourselves above this 200 period moving average, the chances now are that we're going to be moving to much higher levels. So we're really on our way to the 50, 60 and beyond levels from now. The other reason why I think the market has now bottomed out in this correction and that we're on our way to much higher levels is that if you look at the Fibonacci retracement, if we take it from this double bottom here to the top of the current all-time high, then you can see that the market came back to the same affinity that Bitcoin has of the 61.8. It's hovering around here, trying to make up its mind that are we going to bounce up or down? Well, this wick tells you it seems to have made up its mind that we're not going to go much lower. So although we touched the 78.6 very, very briefly, we were very quickly pushed up. The weight of the strength of the bulls was such that we came back to the 61.8. We've consolidated in this area. That tells me that we are now moving towards the higher levels. This is now creating the fuel for our next move up towards the 50,000-60,000 level. The final thing I want to show you in my argument that we've now bottomed out with Bitcoin in this correction here before we move on to higher levels is when we look at the angled volume profile. It's one indicator I haven't shown you before, but if you have a look at it, you'll realize very quickly that when you look at this indicator and just notice something, that every time we fall below it, we get pushed straight back up very, very quickly. There's not many times you have when it actually gets pushed below these levels here. We are currently below this level, and we've had as you can see, we've had the biggest correction so far in this rally that started back in October, and looks to me that if this is true to form, we're going to get pushed back up there again. So the thing to remember with this angled volume profile is that when we fall below it, I reckon we're going to come back to the edge of that around about the 36,000 level here before we make a double bottom pattern before we move on to higher levels. So that's what I'm expecting, that you may get another bounce from the bottom of this angled volume profile at around about the 36,000 level down to around about the 33,000 level to create this double bottom, the W pattern, as I keep talking about in many of my videos, and then we're going to move on to higher levels. So in the next few days, possibly few weeks, before the end of the month, I reckon that's what we're going to do before we move on. This seems to have bottomed out. Now, of course, there is a bearish case with Bitcoin. Before I move on to the bearish case, quite a number of comments ask me, where do I get these indicators from? Well, if you want to know the angled volume profile, all you've got to go is go into the indicators column and type in angled volume, and you'll get this angled volume profile here. And just there's only one of them, so you just click on that and it'll come up on your screen over here, and then you can just see where it is. You can see it in any time frame really if you want to. I always use the daily time frame, so that just gives me a bigger picture of exactly where we're at, and that helps you because if you actually use it, you can use it to actually find entry points. For instance, if you want to look at this now, where would your entry points be? Of course, as soon as it falls below the angled volume profile, that would be your great points to actually enter the market. And currently, I would say this is a magnificent opportunity to buy in at these levels. Yes, the market can go lower because the possibility is always there. The probability is not very high, but it is a possibility. However, there is no one in the investment world, in the history of investments, who knows exactly where the bottoms are and where the tops are. So if you're thinking of double guessing that, then that would be a very foolish way of investing, I would say. So whenever you get an opportunity at the dips, and this is a dip of course, even though you haven't got the bottom of it now, this is still a great opportunity because you're below the angled volume profile here, and the chances are we're going to be moving to much higher levels. So whatever point you have of entry around here, you're going to be making a good profit anyway. And we should always appreciate a profit because, you know, many times people don't make any profit. So when you do get a profit, it is there to be appreciated. With the other indicators that I used, all you have to do is, if you look on the top left-hand corner of my charts, you can see what I've got on there. Like this is the FFEMA ribbons. So if you wanted to get that, all you would have to do is just go into the indicators and then type in exactly what I've got here on the left-hand side, and you would get all my indicators that I use from time to time. And I include these always on the left-hand side in case people want to do that. I know many YouTubers want to show only the parts of the chart they want you to see. They don't really want you to know the other information. They want to keep it a secret. I have absolutely no reason to be keeping any secrets at all. Everything that I do, I just show you everything. I have absolutely no indicators or anything that I keep up my sleeve. I just bring new indicators to your attention as I find them, and then I find them useful. Then I will obviously show them to you as well so that you can find them as useful as I do. Okay, so the main bearish case that I can see currently, and I've mentioned this in the past few videos, is that we were expecting a correction up here simply because if you look at the RSI on the weekly chart, it shows you quite clearly that we were topping out around the 90-95 level. And I mentioned that in the last video, saying that it more than likely there's a very good probability that we're going to correct around these levels. It can't keep on going up. So as you can see now, the RSI has now come back down to the 76 level, and if we keep moving sideways over here, this will keep coming back down. And one thing is for sure is that if you look at the previous bull market that we had over here, notice one thing, that we didn't go much below this 55 level in the RSI. So all the way from here, look, to there, if you look, come down to the bottom of that, this RSI here, all the way to the market topping out in December 2017, we didn't come back below the 55 level. So that's giving us a clue as to when the entry points and where the dips are going to be if you're looking for entry points along this journey that we're on now. So every time we went above towards the 90 level, as you can see here, in this bull market, we always got pulled back down to the 55 level, as you can see. So if I was looking for entry points over here, along this way, the chances are we're not going to go down below this level. So every time we see the RSI at the bottom around here, every time we see the RSI getting down to this level, that would look to me as though that's a great entry point, because if you look at the previous bull market, it shows you quite clearly that if you bought at the dips over here, that would correspond to that point there. So that there was a correction at that point. If you look at the point here, that would be at this point here, etc. So along these dips, this is when you're going to get the RSI coming back, and that would be a great entry point before moving on and achieving the top of the market at the end of the bull market. So let's wait and see. But these are little pointers to benefit you, that if you are looking to get in, if you haven't already got in, I'm fully invested, and if I do get money along the way, that's what I would be looking for, looking at the RSI dips towards the 55 level, and then basically buying there. Don't hang around waiting for the extra point or extra penny or extra dollar or extra $100. Really, as soon as you see the RSI hit there, just put your money in there and then basically ride that until the end of the bull market. One thing I do want to mention about corrections about Bitcoin is that in the previous bull market, as I've mentioned before, the price tended to come back to find support on the 21 weekly exponential moving average before moving up higher, and then coming back to use it as support, and then etc. And this happened throughout the bull market in the 2016 to 2018 period. Now, one thing that a lot of people have been expecting, and myself included, is that we expected the same thing to happen. Unfortunately, this has not even materialized. Although we got the first bounce here, we thought that this was going to happen continuously and continue in the same vein as it did in the previous bull market. Unfortunately, there has been a certain change in this cycle, if you've noticed, that instead of actually the price coming back to the 21 weekly exponential moving average, and it may still come back to that, we don't know what the future is. All we can judge by is what's been happening. And what I've noticed is, and you may have noticed this yourself, that instead of the price coming back to the 21 weekly exponential moving average, instead what it's been doing is that it's been coming back to the daily moving average. So if you look at this last run that we've been having since October, so we had a bounce here, then we had a near bounce there, then we had a bounce here, another one there, We had another bounce there. We've now just gone below the 20 daily exponential moving average here. What that tells me is that the level of corrections has moved from the 40–50% corrections that we got in the previous bull market to the 20, maybe 30% corrections here. Only time will tell of what happens in the future. But currently, this is the pattern. Please remember, with Bitcoin, the patterns tend to rhyme very, very clearly. So it looks to me as though some sort of a pattern is being established with Bitcoin in this bull market, that instead of the 21 weekly exponential moving average, we're tending to find support on the 20 daily exponential moving average. So if you were looking for entry points, so what I've done is now that anytime the price goes, let's say from where we are now, it moves up here, and then the 20 daily moves up here, and the price comes back to the 20 daily, that would be a great entry point before we move on, because that's what we've got the data to go by. If it does go back down to the 20 weekly exponential moving average, then we'll obviously revise our patterns. Always remain humble in investment. Never get stubborn. Never think that you know everything and that the price has to do what you want it to do rather than what it actually does. So we must always be humble in terms of making ourselves change to the market rather than expecting the market or the price to change to our way of thinking. The main thing I find is that we have to remain calm in these markets. There are too many YouTube channels which I'm getting very disturbed by, because there's a lot of people following the very, very popular YouTube channels which are sucking people in and telling them to get into the market, do your short-term trades, whenever there's a breakout, do the trade. Whereas it would be far, far less stressful and probably more profitable if you just remained in the market and then just ride it all the way through to the end of the bull market. I hope that's useful. If you've enjoyed the information here so far, then please do remember to like and subscribe to the channel if you're new. If you want to support the channel, then please click on any of my videos, and then below the videos you'll find a box called Show More, which gives you a description box, and in that description box is the affiliate link with Etoro that I have. So I partner up with Etoro because that's the main exchange I use for all my investments. These are the reasons why I tend to use Etoro. It's a very simple exchange to use in terms of depositing money and withdrawing the money, as well as trading if that's what you want to do, as well as for long-term investing, which is what I tend to do. So if you want to support the channel, please click on the partnership link, and then what you'll do is you'll get this box here, and then you can basically put your username, email and password and just fill in the form there. If you like any of my videos and you find value in them, then please don't forget to like and subscribe to the channel. Okay, so moving on to Ethereum. If you've been watching my channel, you'll be very familiar with this particular chart. This is the pink channels that I drew many, many months ago when the price of Ethereum was around here. And as we went through this channel, I always mentioned that this particular pink channel corresponds to this pink channel that we got in 2016. And that once we broke out from here, if you can see with this candle here, there. Now, as I said before, many, many times now, that once we break a weekly or a daily candle above this pink channel, we will be going up to the races. And that is where the real bull market will start. And as you can see here, we had that open and close of the daily candle and the weekly candles here. And we are now well and truly in a fantastic bull run for the Ethereum price. All I would say is that if you haven't already got into Ethereum, and I'm fully invested with Ethereum, and I said many times before that I was accumulating at these levels around here. And since then, obviously my value of Ethereum has absolutely shot up to where we are now. And I'm expecting that to go much, much higher to our target level of 21,450. Will it meet that target? Well, I don't have any reason to change that target. In the end, it could turn out to be $10,000, it could be $25,000, but it's always good to have that target. And I've gone through the reasons why I've made that target. We don't really need to know that. All we need to know is that this is our target. This is something we're aiming for. Let's see how far we get into that. I'm very confident that we'll meet this target. And I do have a sneaking feeling that we're going to go further than this. But please don't hold me to that. Everybody has to have an opinion, and that's my opinion. I think that the strength of the bull market is such that we will surpass this target. But if we don't, that's fine. We'll take whatever we can over here or wherever, because we have our exit indicators. We know when to get out. We know when the top of the market is going to be. So therefore, we don't really need to stress about whether we're going to meet this or not. As soon as all the indicators are showing that we are going to have to exit the market, we're out of here. We collect our goods, we collect our money, we collect our fortune, and then we move on to the next stage of our investment strategy. I also want to show you the Ethereum on the monthly chart, because something has developed here which gives you even more reason to know that we are really going to go to the races now. If you look at the close of these candles here in 2018, that was January 2018 here, at the end of January 2018 that is. If you draw a horizontal line there, that tells you that we are currently breaking through with a body of the candle above the previous closes. If we can close above the previous close in 3 years ago, this will tell you that we are now entering into the parabolic phase of this market. So we have very good reason to believe we are now in the last 6 to 9 months of this parabolic rise that we're now going to see with Ethereum as well as with Bitcoin. So keep an eye on this candle, the monthly candle for Ethereum. If we can close above the previous all-time high where the candle closed, and that was around about the 1150, let's say, around there, 1150 mark. If we can close the body of the candle, not the wick, but the body of the candle, and always remember the saying in investment circles that show me a high and I'll show you a buy. Let me repeat that again. Whenever you see a new high, that is usually a sure sign of a buy. So whatever money I can muster that I can afford to actually put into Ethereum, I'm going to be doing that. I'm already very well invested. But obviously this is another great opportunity. Maybe this is the last opportunity to get the biggest gains now, between now and the end of the bull market. If you think about it, the all-time high here was about 1420, and we're around those levels now. We're about 1259, 1260 now. But once we break that with a closing candle above those levels, then to get to the 21,000, we're talking about nearly 18, 19 times. So that is what you're going to be getting with a investment at these levels. So it's never too late to invest, especially when you know that the bull market has some way to go, as we know in this market with both Ethereum and Bitcoin. Okay, a quick look at the Ethereum on the shorter term time frame, the 1 hourly chart. As you can see, just like Bitcoin, we're coiling into this symmetrical triangular pattern. We're going to be breaking out before the end of the month here. So the chances are, the probabilities, we're going to be moving up, just like with Bitcoin. Obviously, there is that possibility of going further down. But I think with having made, just like with Bitcoin, we made a higher low here. There was a great opportunity for the bears to push this price right down, but they got pushed back here, just like with Bitcoin. So it tells me that the strength of the bulls is much greater than the bears can actually push them down below this triangular pattern. So the next breakup is going to be on the upside towards much higher levels. If we look at the levels we can expect with Ethereum, let's have a look on the daily chart. So what level can we expect to get to with Ethereum in the next few weeks and months? Well, I think we're going to have a very quick run up from, let's do the measurement from the previous all-time high at 1420 odd to the bottom here, and take the Fibonacci retracement there, and we can see that This is where we're at, obviously, at the previous all-time high levels here. But the next level, remember the 61.8 is the golden level that we always know that the Ethereum and the Bitcoin has an affinity to actually be like a magnet to be drawn to. So the next level I'm looking at is the 2,253 level. So once we get a weekly candle closing above the 1424, then we're going to be going very, very quickly to these levels at 2,200. I don't think we're going to have any corrections along here, so we're going to bide our time here a little bit before we go on to the next level. So to me, 3,500 is very, very achievable within the next 4 to 8 weeks. And obviously the longer term is much higher levels in this direction. Now, this is the Ethereum to the Bitcoin chart that I've been showing you in the last many videos now, and what my expectations are. And I've shown you many times before that in the previous bull market, when Ethereum broke out from this channel here against Bitcoin, it outperformed Bitcoin by many times over towards the end of the bull market. And I said many times that in the first part of the bull market, which we're in now, Ethereum will actually outperform Bitcoin. So while it lagged behind until a few weeks ago, certainly in the last 4 weeks we have outperformed Bitcoin by looking at this chart on this side here, which is the equivalent over here. And I said that once we break out from this channel, we'll start going to the races. So if we just zoom in on this part a little bit here, it is a bit of a busy looking chart, but let me just show you that this is where I started buying Ethereum even more. And I mentioned this many times that when we were getting towards the bottom of this channel, that we are creating this double bottom here, and that we're going to be going towards the top of this channel. Well, we've gone past this top, we've come back to see the resistance as support, and now we're moving up to the races. My first target over here, as you know, was the 0.3, and we mentioned that when the price was around here at 0.02, I think, if I remember rightly. And I said we'd very quickly get to meet this target at 0.03. Well, we've met that now here, and all we can say is that now we're going to the second target, which is 0.039. My ultimate target is up here at 0.0715. I suspect it's going to go further than that, but only time will tell, and we can only dream about those things, because obviously Bitcoin's going to do well as well. And if Bitcoin does well and we get to these levels, then obviously Ethereum's going to do even better. Now, these are my targets. I haven't gone through this before. My ultimate targets are these here. So this is my normal average target at 0.0715, as I've mentioned in the previous videos. But I've actually put an ambitious target because I think the strength of Ethereum that I've seen tells me that we're going to go past this target against Bitcoin and go up to towards the 0.13 level. Now that would be really, really fantastic. If you're holding Ethereum, you will be making a huge amount of money in terms of against the Bitcoin growth. So if you've got 50-50, you'll find that the Ethereum will surpass that. Let's hope so. But either way, if you're hedging your bets with both, then you're going to benefit both ways. But these are my targets for the next 6 to 9 months. Okay, so on to the questions that people have been asking me. The first one, as I said, was where are we in the 4-year cycle? Well, this is the 4-year cycle chart that I've showed you for many months now. And as you can see, that we drew these channels long time ago now, seems like ages ago, but we're still following these channels. This was the first channel, which I always named as the pre-parabolic phase, and that once we get out of this first red channel, we tend to go into this parabolic phase. This is what happened in 2016 to 2018. This was our channel that we drew for the current price, and as soon as we left this channel, we've been now going on to this, from this pre-parabolic phase, now we're into this parabolic phase starting now really, and going into this channel where we're going to top out at around about the $300,000 target that we've always had for the last year and a half. Now it could be 250, it could be 350, it could even be 150. All we know is that that's our target. I've got absolutely no reason to change that target under the current circumstances, there is nothing in the indicators that's showing that we're not going to meet that. It could be that we meet it a bit earlier, maybe around August time, judging by the strength of the bullishness in the market with the institutions coming in and a lot of people just buying in, and the FOMO and the retail people also pushing in there. I can honestly see a very, very quick rise towards the 300,000. Whether that's going to take 6 months or it's going to take 9 months, only time will tell, but certainly that's our target. And this is where we're at, really. We're currently at this point here. We're now well into the 4th year of this 4-year cycle, which will culminate at the end, at the blow off top that we're expecting around the 300,000 mark. So we're maybe 6 to 9 months, 12 months away. This is where we're at. This is where we're going. All I would say is, this is our main goal. And we are on our journey at Wisdom Bites to get there. And what we want to do is, we want to use our exit indicators, which I'll show you very, very shortly, to get out before the market tops out and we get into this bear market. And as you know, from many, many months ago now, I've had this bear market target for the next cycle to be around 42,000. And this was based on really the stock to flow ratio chart that I showed you many months ago. And if you look at that chart, and I'll go into it another time, it gives you a very good indication from previous times exactly why the next bear market target will be around about the 40 to 42,000 mark. But the main thing to remember is, this is our prize. This is the target. This is the end goal, that the vision that we've had for the last 4 years. This is what we want to achieve at the end of this bull market. I know it's very difficult to keep your emotions intact and to just remain patient along this journey. 6 to 9 months is all we need to be able to do that. It's very, very hard, especially when you have YouTubers showing how to get in and out of short trades and how to make great amounts of money. Well, that's your choice at the end of the day. I've chosen not to do that because I don't want that stress. But if you think you can do that and you can make money, then, well, I'm very, very happy for you, and I would love to see people do that. It makes me really happy when other people are making money, but I can only judge by myself and my emotion levels and what suits me and my strategy for this bull market. And my strategy is certainly not to get in and out of these trades, judging by what the current situation is with Bitcoin. The second question people ask me is, when will we know when to get off the Bitcoin train? Now, obviously, the majority of people don't know that. And as the price keeps moving up, you'll find that more and more people will be maxing out on their credit cards. They'll be borrowing money. They'll be going to the banks and asking them to lend them the money. They'll be maybe selling their assets and then trying to get in. And unfortunately, what will happen to those people is that as the market goes up, they'll put more and more money into the market. And then what they're going to find is that it's going to topple out here, and they won't know when to get off. And they'll find themselves on the other side of the bear market, and they won't know when to get out, because they'll still be, as the market falls, they'll be expecting, because they'll be going into this ride here, they'll still be expecting that, oh, these are going to be just another correction. But instead of going back up, the market in the bear market will go down, go up a little bit, go down further than the previous low, etc., until we get into the bottom of the bear market, which is when most of the retail people will move out at a big loss, unfortunately. That's just the way the market works. It's nothing that we can do about it, except that we have to have a strategy to get out before this happens here. Exit indicators that I will be using in the next 6 months to get out at the top or near the top. You can never be guaranteed, obviously, but we have a good idea when to get out at this level around about this time here. The first one is this moving average. You may have come across it before. I haven't heard anybody talking about it, but I came across it many, many months ago, and I showed this to you at that time. It's the 1458 moving average. So if you go into the moving averages, if you look at the 4 moving averages, 4MA there, and then change the setting, instead of the length should be like 2050, this is normally 100. but I'm not going to be showing that. I'm just change this 200 level that's normally there to 1450. If you go to the style, you uncheck the other ones and just leave the last one, the 1450 checked. So therefore, you can only see this one here. So what we've got now is the 1458 daily moving average. And what you find is very, very interesting. In the last bull market, the actual top of the previous bull market, what we had in November 2013, if you draw a horizontal line all the way across, the interesting thing you find is that the 1458 daily moving average actually crosses the previous all-time high at exactly at the same point as the next all-time high. And here it was obviously the 20,000 mark. If you go to the previous bull market to see whether this happened, we don't have enough data, but if you look at this trajectory, this is telling you that because this was such a steep curve here, you're going to get a very steep curve down here as well. So if you look at the top of the next bull market after this one here in 2011, then the top of the bull market in 2013 here coincided with the 1458 daily moving average crossing the horizontal line from the previous all-time high. That brings us to the current bull market. So where is that going to be? Well, the 20,000, let me just take this out. The 20,000 is the all-time previous high that we had in December 2017. If we draw a line there, look at where the 1458 daily moving average is moving. So if you draw a trajectory here, this is telling us that we're going to be crossing the top of the previous bull market around here. If you just continue that, we're going to be crossing anywhere around these levels here. And wherever the price is moving to at that point will be the top of the bull market. So we're expecting it to be here. And you can see the trajectory here quite nicely that it's actually moving in exactly the same direction. So that should give you a lot of confidence that we're on the right track. We should all be invested as fully as we possibly can. Everybody has their own strategy, so follow your strategy. That's what I say. I'm not your financial advisor. I'm certainly going to be riding this train until I see this 1458 daily moving average cross this previous all-time high line here. If it's over here, let's say it goes, we have a massive rise very quickly. Well, I'll know that at this point, wherever this price is, if this rising very quickly, it'll be around here anyway, at the 300, 400, whatever mark it will be. And we can top out here. As soon as this crosses, a day before maybe, 3 days before, 2 days before, whatever you feel comfortable with, that is the point to get out before we get into this bear market. We'll wrap it up there. Thank you once again for watching. Apologies once again for the late video. We'll be doing a lot more of them in the next coming weeks and months, obviously. If there's any questions or comments or suggestions you want, please leave them in the comments below. And please do remember to like and subscribe and to turn on the notification bell. I can tell you one thing. Whenever I see a lot of likes on the video, that really does inspire me to make videos much more quicker. So if you do want videos quicker, and when I see 50, 60, 70 likes, that really does inspire me that people are valuing the information that I'm giving, and that will make me want to even make more videos more quicker. So thank you very much indeed for all those people who leave the comments and click the like button and make me feel wanted and loved and what have you. I can't tell you how much I feel appreciated by that. So thank you very much indeed. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.